I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a return guest by someone that can help shed some light, big picture, and also a micro and macro picture. He is an expert in geopolitical and economic cycles. He has the famous economic confidence model. He is Martin Armstrong. Martin Armstrong, you also have a new book out that you tell me sold out, the fastest sellout of any book in the history of selling out on Amazon. It's a brand new book about managing the world economy and the rise of modern monetary theory and the inevitable fall of classic economics. It has everything. We'll talk about this at the end of the book. It has my favorite basket case, Deutsche Bank. It has all about money printing, the history, coinage, what's going on, and also a chapter on the way out. It's 500 pages long. I mean, it's lots of photos, pictures. It's a fabulous book. We'll talk about this, but I want to talk about what's going on in the economy to start with. And I just want to start with Ray Dalio, the guy that runs the biggest hedge fund in the world, Bridgewater. He's out telling people that, quote, cash is trash, end quote, and buy gold. What's up? Why does he feel it necessary to come out and say cash is trash and tell people to buy gold? What's going on at Davos, Switzerland, no less, on CNBC? What's going on?
Look, I don't know why he's saying that. I mean, it's not. I think it's more or less traditional analysis, thinking quantity of money and things of this nature. But I don't know. I mean, I have to really deal with institutions around the world and governments, and I see exactly the opposite. They're just scared as hell about everything else. I mean, really, the whole repo crisis is they're scared to death. Really, it's interest rates that are rising. I mean, you had all these pundits out when the repo crisis hit in September saying, oh, it was, taxes and things of this nature. I mean, these people appear on TV apparently just to sell something. And they don't have the experience and have never worked for in the industry. They don't know what really to say, so they just make up stuff. Here we are. I mean, since September, the Fed can't get out of the repo market. Why? Because the Fed is not, I've seen people calling this quantitative easing. I mean, all sorts of crazy explanations. But really what's happening is that interest rates are a factor of two primary issues. One, future inflation, and two, risk. The global capital sees risk and is pushing interest rates up. So that's what's really going on here. We have major problems around the globe. And it's not just the Fed. If you look at the Bank of Japan, they came out and said, we're going to buy government bonds unlimited. They, too, were trying to prevent interest rates from rising. That's what's going on. So we had an inverted yield curve in the summer up to August. Then we flip into the repo crisis in September. People are confused because, honestly, they keep looking domestically and they don't understand this is a global event. And I mean, I've even had to explain things to even central bankers. I mean, the focus has been that everybody pays attention to their domestic situation, but they don't know what's going on externally. And this is a global contagion that's developing, and it's pretty serious. But I mean, the rise in interest rates has tremendous implications all the way around the globe. I mean, you have emerging markets that borrow dollars. So as the dollar goes up, they end up, going into default. You have the European currency. Central bankers don't want to hold it outside of Europe. Why? Because effectively at a negative interest rate, it's a tax on them. So it doesn't matter if you can be in Asia, Middle East, or whatever. You don't want to hold euros for a reserve currency. You're being taxed to even hold it. So I mean, it's the theories of negative interest rates, etc. I mean, this is all coming to a real head. So why would somebody say buy gold and cash is trash? That's absolutely nonsense. Unless you're talking about euros, things of that nature. Yes, euro's going to go down. They're going after cash dramatically over there, but more than 70% of the dollars, the physical paper dollars, are held outside the country. I mean, the dollar is the number one thing being hoarded globally. You can't get on a plane and with a suitcase of gold anymore. The days have changed. So, I have friends in the gold business, and they can't buy or sell without reporting who's doing what. Europe, they've lowered the standards. So if you're going to buy basically anything over an ounce of gold, you have to be reported to the governments as to, oh, who are you, where's the money coming from, and what are you doing with it? So I mean, gold is not the free market solution that it used to be. It
Would you
can
be a
be.
holder of gold? Would you be a buyer of gold?
I mean, for an individual, you want to be diversified to some degree. All right. Um, but what I'm saying is that, I mean, look, 20 years ago we could hop on a plane with a suitcase full of $20 gold pieces and fly to a different country. Nobody said anything to you. Today they confiscate it. It's getting to be really serious because they're hunting money everywhere on an every possible level. Um, I mean, we have offices around the world. I travel all the time. They've subtly changed requirements. It used to be, do you have $10,000 in cash or securities? Now, when I fly to Europe, it says, do you have $10,000 of anything of value? So, what is that? A watch? I mean, it's and if you don't declare something, it's ours. They just take it. Um, in Italy, if it looks like you have too much gold jewelry on, they pull you off to the side and they weigh it. I mean, the governments are going broke, absolutely going broke, and this is the crisis that we face, particularly going out over the next 4 to 5 years.
And do you think that that we're headed for some sort of a financial crash? I was reading on one of the financial channels that looks like the global economy, and now including America, is all slowing down. Is that adding? Is that throwing fire on the going broke scenario?
It's the biggest problem with the going broke scenario is the unfunded liabilities. You know, we don't people don't realize that government pensions are basically the thing that will destroy everything. Because in the private sector, we contribute to our pensions, 401ks, etc. In government, they contribute nothing in most cases, and they just are granted these things. Look, I have a friend whose mother was a school teacher in New Jersey. Okay, she never had to contribute anything. She retired. She gets full health care for her and her husband for life. I mean, what do they get in health care benefits alone? You're talking about thousands and tens of thousands of dollars a year that a private individual would have to pay for. So this is the problem, and the government. Let's say you have a small town and you got 10 cops, and 5 of them retire. You now have to pay the 5 that are retired, but now you also have to hire 5 that did retire. So the cost of government is rising exponentially. It's not just a few percent per year. We've reached the point where these pensions are going crazy. And so as a result, the cost of government is rising exponentially. Now, this is what's causing, particularly in Europe, the problem of the economic crash or decline there is that people have been looking at the monetary side, say, oh, well, you're creating all this money. Yes, fine, but then the government has been aggressively going after money every which way possible, outlawing cash in many things. You go to Australia, they just made it they're trying to make it a criminal act if you buy anything with $10,000 in cash or more. A criminal act. You go to jail for that. Even if you pay taxes on it. It's your money, whatever, you've paid everything you were supposed to, you still go to jail. So I mean, governments are not reforming. Instead, they're just turning to us and saying, go get the stupid bastards because, that's what we've always done. They'll pay whatever we tell them to. That's the attitude. So we have declining economic growth in the sense that you have taxes that are rising. And that has really been very detrimental because the real economic growth comes from disposable income. I mean, if I give you $100 and say, here's your salary, but give me $90 back, am I giving you 100 or am I giving you $10? They never look at what they're demanding from people. So it's just getting crazy. And
Do you think this is why we're running against the Second Amendment type stuff in Virginia? I mean, the Democrats want to, and probably some of the rhinos too, want to disarm people, and I guess they have to disarm you to steal from you.
yeah, that's
Am I wrong about that?
um, I mean, look, I used to live in Switzerland for a while. You had to do your time, um, go get trained, etc. And then what would happen? You left and you took your gun. So every house has a gun. They also have the lowest crime rate because you're not going to go rob a house that you know the guy's got a gun. Or over here, it's the opposite. Oh, disarm everybody. Well, the only people you're going to disarm are the legitimate people because the criminals buy guns on the black market. They don't walk into a store and say, "Gee, I need a gun. I'm going to go rob a 7-Eleven, please." You know, the black market's extensive, so the only people that won't have guns are the legitimate people. Everybody else will. Um, so it's just really I don't know. They can't really logically think about it this way. And every time there's a school shooting, oh, see, well, fine, you can say for criminal backgrounds. Most of they're crazy people. They don't have a past criminal background, so you're not going to pick that up. It should be a mental test, not criminal background. Criminals don't go in to buy the guns. So I don't know if it's really just that, if they're really brain dead and they don't understand what the problem is, or are they really just trying to use this as an excuse to disarm people, which seems to be more logical that what they're doing because they know we have an economic problem. The governments, this is how Rome fell. The army started splitting. The emperors became generals and they would hail their emperor and then they would sack any Roman city that disagreed with them. They couldn't pay them. So they started, sacking their own cities. I mean, in Chicago, you had this teachers union saying, okay, fine, we're kind of broke. Well, let's put a tax on everybody trading stocks and futures in Chicago. What's that got to do with the local school system? All you'll do is cause the exchange to leave. That's it. So I mean, it's always, okay, fine, go get somebody else to pay me.
Yeah, yeah. I drive through Illinois all the time, and they don't mow their highways, but about once a year they got help. They got they don't have enough money to mow the highways. I mean, they got places where they used to be mowed, and there's trees, this big growing up now in the middle of them. Right, they just mow
Yeah.
one mower length. That's all they can have. They got rest areas closed down with brand new, metal roof, baked on paint, roofs. Modern day. They can't afford to run them. I mean, Illinois is a mess.
That's the Supreme Court ruled that they can't, renegotiate pensions. And so either the state has to go bankrupt or dissolve itself. I mean, that's the only way out of it.
Yeah, 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 yeah. Do you see a market crash anytime soon?
Uh, yes, I mean, the market has come into our economic confidence model, which turned on January 18th. So this looks like we have at least a temporary high at this stage in the game. Pull back a little bit. If last week high remains the highest weekly closing, we close lower this week, then we should pull back and get a brief correction. But is this the record high of all times? No. We're going to go much, much higher, but you have to understand it at some point in time, capital begins to figure out who's the greatest risk, and the risk is government. So at that stage in the game, when that point is reached, then you have shifts. The capital will move basically from any public type investment, government bonds, things of this nature, and they'll move into the private sector. So that's equities, can be gold. It's been, real estate at different places. You try to go to the tangible asset side that is, and equities are also tangible. So it's you try to move away from any of the public things of that nature, and that's historically how it's always been, back and forth. The Germans that went through the hyperinflation, they started hoarding, anything other than money. All right, so Ray Dalio's comment, I mean, we're not at that point in time, and at this stage in the game, we're looking at cash is still king, but it's primarily in the dollar. The euro is going to continue to crash. Those are the problems we have outside the country, and you have to realize that if the dollar went down, Trump would be having a party. Trade would be improved, etc. It's when the dollar goes up that causes all the problems. When the dollar rallied into 1934, coming out of the 31 sovereign default, Roosevelt ended up having to confiscate gold and devalue the dollar. The last time the dollar went up to all-time record highs, the British pound went to par, was 1985. What did they do? They created the G5 to try to manipulate the dollar down by 40%. So when the dollar goes down, they're happy. It's when the dollar goes up that causes all the problems. And that's what we're looking at, is a strong dollar rally yet, and that will break the back of the world monetary system. Then you have emerging markets going bust, things of this nature. Europe is already being torn apart. So it's that's the real problem. I mean, Japan has basically destroyed its free market for government bonds, trying to keep interest rates from going. All that happens is you create a two-tier system. You can have the fake rates because the government buys all 100% of its bonds and pretends it's paying only, negative interest rates, but to itself, I mean, why even issue bonds if you're the one buying them all? I mean, it makes no sense. The same thing in Europe. The ECB owns 40% of the share of debt. They can't afford to have interest rates go up. The ECB can go bust. The ECB is different than the Fed. The ECB, in order to get more money, even for quantitative easing, it has to have a vote from all the members. All right. In the United States, the Fed doesn't have to do that. The Fed is completely autonomous. That's it. So, what are you looking at? It's the Central Bank of Europe can go bust. If everybody just disagrees, that's it. It can't function.
So the big problem won't happen here in America. Something's going to happen. Something's going to blow up in Japan or China or in Europe, and you think that's how it starts? It starts overseas. Will you explain that?
Look, even the Great Depression, that's what happened.
Started overseas.
It began in Austria, then spread to Germany, then it went to affected England, and then you had South America default, China defaulted. I mean, you can go on eBay and buy all these bonds from the 1930s. I mean, that's what really destroyed the banking system in America. because they had all these foreign bonds and they defaulted. Okay, so this is what happened. So the U.S. back then was also coming, was the center of the world financial system because of World War One and World War Two. Look, J.P. Morgan had to bail out the United States. It was virtually bankrupt in 1896. By the end of World War One, we were already the financial capital of the world and had displaced Britain. By World War Two, that was it. We ended up with 76% of the world's gold reserves. That's why the dollar became the reserve currency. So the capital flows came to America. If you got tanks running around, banks being blown up, are you going to keep your money in Europe? You put it on the first boat to the United States that you possibly could.
So let's fast forward to today and Germany. And one of the things in your book, which I want to get to, you talk about my favorite basket case, Deutsche Bank, with, I don't know, 40 trillion, 50 trillion in derivatives. They tried to merge it with Commerzbank. That's the dead and deader. But anyway, what happens? Where do you think the blow up will happen? Will it happen in Europe? Is that what we should be looking for?
You have to understand what I go into in the book, and most people don't get this, but to get Germany to even sign on to the euro, Kohl has admitted, and I put in the quotes there, that he acted like a dictator. The German people never were given a chance as a referendum to vote on anything. He just took them into the euro. And his demands were that you wouldn't consolidate the debts. So every country would have retain its debt, but convert it to euros. Now, when they were creating the euro, they actually came to me. They took, the whole back row of our World Economic Conference in London that year. I sat down with them. I told them, I said, look, the only way this is going to create a real currency, you have to consolidate the debts. Back then, they said, yes, we understand, you're correct. However, we got to just get the currency through first. We'll deal with the debts later because of coal. So they've never dealt with the debts. So this is why the euro's never been able to be a competitive reserve currency.
And they still haven't dealt with the debt. They still have not dealt with it.
Because they're under this false impression that had they consolidated the debts, then Germany would be bailing out Greece and Italy, etc. And I told them, you're going to end up having to bail them out anyhow. But so you take that problem of no consolidation of debt. This is also what's behind the Deutsche Bank problem. Because now they say, okay, fine, well, we can't do bailouts because that means that money would flow from Germany to bail out banks in Greece. We can't do that. So then they come up with this bail-in situation, which started with Cyprus. And it was very nice. They said, no, this is the way it's going to be. Now you have Deutsche Bank. Deutsche Bank's the biggest bank in Europe. It's got a problem. It should be bailed out. They can't bail it out because, Merkel said we're not going to bail out Deutsche Bank, so nobody else could bail out their banks. So what happens? Then there was a proposal to merge it with the French banks. Then they said, oh, no, we can't allow the French to be bailing out the Germans. So that didn't look good. So then it was like Commerzbank. Oh, well, that didn't look good because they were just in as much trouble. Then Deutsche Bank said, well, how about we join UBS and we merge over there in Switzerland? Oh, you can't do that because they're not part of the EU. So, I mean, it's a real quagmire. Politically, they can't allow it to merging with any other bank outside of Germany because Germany loses face. But then on top of all this madness, yes, they have 43 trillion in derivatives everybody talks about. But what nobody talks about is that they also have 21 trillion that they have guaranteed because they are a counterparty agent. In other words, after 2007, the solution supposedly to prevent another blow up with derivatives was we'll create a central clearing place. Okay, that makes sense. They made Deutsche Bank a central clearing. So they clear their own stuff. They guarantee other people's, and this is just insane.
Is the
Uh,
repo market being used to prop up the Fed repo market being used to prop up foreign banks?
it was, and that's basically what part of the problem was that banks start pulling back because now you take a situation of interest rates are rising because there is increased risk. Period. Okay. I mean, it's called credit ratings, AAA, A, B, whatever. All right. People are now perceiving that the risk is rising, but the interest rates are artificially being maintained very low by the central banks. So you're getting a huge disparity between real rates and the fake rates that the central banks maintain, which are applying only to government bonds. I mean, walk into a bank and say, okay, I got a AAA rating. What will you lend me money at? Will you give it to me at even 1%? The answer is no. All right. So forget about, competing with the government and getting a negative rate. You can't even get 1%. So the whole thing is just a real giant mess. And this is what you get when you have politicians that make regulations that have no experience whatsoever. You had them create these MiFID rules, and then at the last minute, well, wait a minute, if we do that, you're gonna technically actually bankrupt banks overnight. Oh, gee, we didn't look at that. Well, okay, we'll postpone it and we'll look at revision. I mean, take Obamacare. Something simple. Yes, it sounded nice. All women should have maternity leave. I don't think anybody disagrees with that. What did they put in the code? There's no age limit. I had insurance. I was canceled. I said, why am I being canceled? And they said, oh, well, you don't have maternity leave. I said, well, first of all, I don't think I'm going to get pregnant. Second of all, I'm not, don't expect to have children at this stage in the game. But by law, Blue Cross and Blue Shield had to terminate my insurance and give me a different policy, which was like twice the price, for maternity leave, which I didn't have. Then they sent me cards for children I didn't have. This is the way regulators are. They don't have a clue as to the real world.
Well, let's go back to the repo market. How long? I mean, you're saying they're stuck and they can't get out. Am I right?
Correct.
They're stuck. How long can they do this at 90 billion a night and 100 billion and 50 billion and every night? How long can they do this?
Yeah, but this is not accumulative. Okay, so it expires every day.
Yeah, but who pays? I mean, they got to roll it over. They don't have the money to pay for it. I mean, how long can?
No, the Fed can create money. The Fed has the ability to create elastic money. The ECB does not. All right, the Fed is a different structure.
Doesn't that affect the money supply and the inflation?
No, not really. It's being.
And what? Well, let me ask you this. What? I don't know this. Okay, I'm not trying to debate you. What the heck? It's wrong. I mean, I know it's wrong. I'm not crazy, right? Tell me I'm not crazy.
No, you're not crazy.
Okay, so what can go wrong with them pumping this much money into the repo market every day, billions and billions every day? What can go wrong?
Basically, what goes wrong with it is that they lose the game. They're doing this to try to prevent interest rates from rising. All right. If they did not do this, the short-term rate, which would be up dramatically. What you have to understand, central banks control up to now only the short term. Long-term rates are the free market. That's what quantitative easing was about. They went in to buy the 30-year bonds, in theory, reducing the supply of 30-year debt, and that would bring down the interest rates on the long end. This was their theory. All right. It really didn't work, and you had a whole bunch of people saying, oh, this is going to be hyperinflation, all this stuff. Again, these are all theories that are very antiquated.
So wait. I'm sorry. I want to come back because I'm not as smart as you. So what could go wrong is that they could keep doing this, and rates would rise anyway.
Correct. They've already lost control. Otherwise, they wouldn't be doing this. You understand?
Yeah, oh,
what I'm
yeah.
saying?
John Williams said the same thing you did at shadowstats.com. They've already lost control and almost did the exact same thing. So you're saying that if they lose, so they've already lost control, but if they totally lose control and rates start rising, what happens?
Then you're going to see the United States is much different than the ECB or even Bank of Japan. We do have a legitimate bond market. It's the biggest in the world. The Fed is not buying up everything. So what will happen is that the Fed is trying to keep the rates down. The Fed loses, rates are going to go up, and you're going to see that in the Treasury auctions. It doesn't matter what the Fed is trying to do in the repo market. You'll see this stress appear in the Treasury auctions, and the government will have to start paying higher prices. So this is what will take place. Why I say these theories that people come up with, a quantitative, easing is going to, it's going to be hyperinflation. These are all very antiquated from the 18th century.
The government's worried about default, not inflation. Is that right?
They're worried about defaults outside the country in particular.
Okay.
All right. And it's a global economy. So let's say you have Deutsche Bank goes bust. And over there, their political position is, we can't bail any banks. Okay, so any foreign bank that has a position with Deutsche Bank loses 100%. So you can see it becomes a global contagion that a default over there wipes out banks globally that anybody's dealing with Deutsche Bank. So it's a serious issue. The Fed stood behind the banks in 2007 and bailed them out. That suppressed the global implications of what would happen. So why I say these theories are back in the 18th century, look, I argued in Washington, finally got the Fed to change. They were, saying, we'll buy 30-year bonds and that will stimulate the economy. I said, are you really serious? That theory assumes that 100% of the bonds are held by Americans. Hello, 70% is outside the United States. China sold all its 30-year bonds and reduced its maturity to 5 years or less and said, thank you very much. So the money didn't even go into the domestic economy to stimulate. It went to China and everywhere else.
Would you say the Fed is panicked, freaking out? I mean, they are freaking out about this. They must be, because the scenario you're painting is we'd have a daisy chain of global default in a heartbeat if rates go up fast enough and high enough. Is that right? Would we have a daisy chain of global defaults if rates went up too high and too fast?
Oh, yeah. I mean, look, when the rates went up and they had the sovereign defaults in 1931, you had 9,000 banks, going belly up in the United States. So what we're talking about here is the fundamental structure of central banks. All right. The Fed trying to hold repo rates down, this is the last ditch effort of them trying to hold on to power, which has been to control the short-term rate. All right. They raise rates, lower rates, etc. That's their theory under Keynesianism. All right. So what you're talking about, that's what that book is really about. Manipulating the world economy. It's coming to an end. All right. We can no longer control it. The central banks are losing power. All right. That's what this book is really about. All the different manipulations government has tried to control it. And they're losing it on every possible level. So this is like the last ditch, the last hurrah or last battle for the central banks. And if the Fed loses, you're talking about central banks can no longer function in controlling the economy, inflation, anything. It all goes out the window.
Do we get like Mad Max? I mean, are we going to be, trading shotgun shells and pieces of bread? I mean, is that where we get? Is that where we get to if this happens?
I don't know if it's going to go that far. I mean, I
I'm trying to
think
be funny here, but
yeah,
it's
no,
going to get rough if this happens.
it it's going to require um, really, it's an international political reform that has to be done.
Wow.
All right, and that's why I kind of go into that book, kind of the way out. We really have to look at this. It's politicians that have no clue of what they're doing. I mean, look at this. When people run for president, all right, there's no qualification. Do you have to have a degree in something? This is more or less like hopping in a cab and saying, "Oh, well, you smile nice. Do you mind if you operate on my brain next week? You'll do it cheaper than the other guy." There's no experience with these people. It's just, I mean, Trump has got the most experience of any of them because at least he's been on the private sector side. He understands debt and things of that nature and interest rates to some degree. But, I mean, most of the rest of these people, and in both parties, I mean, they've been career politicians.
Do you think Trump gets reelected? Do you think he can make it?
Yeah.
Do you think? Like you've said this before, CNN's been dogging him all that, and your friends around you. You travel around the world, you have friends everywhere, and you say, "Hey Marty," your friends. I call you Mr. Armstrong. Hey Marty, what's up with CNN? Trump's doing a great job. Is that what they still think? Your friends around?
Yeah. No. Look, it's serious at this stage in the game.
But your friends like him still around the world.
Outside the United States, everybody likes Trump.
Wow.
They see that he's done a good job, etc. And this is all political here in the United States. I mean, CNN is no longer regarded very well outside the United States at all. In Asia, they hate it. Nobody really watches it. It's just so biased.
Yeah, it's terrible.
Yeah, it's crazy, and that's the real issue. So
your book sold out. Let's talk about your book here a little bit, and let's talk. I said it's sold out in 3 days. Your book sold out.
3 hours.
Sorry, three. I'm sorry. It sold out in 3 hours. I mean, this is. I mean, I can't. I mean, there's so much in here. I mean, if you look at what you have, and just look at this. I mean, it's glossy. It's hardback. It's all kinds of stuff, including their last chapter, which is A Way Out, which you talk into great detail about that. I can't get into all that, but if you're going to give me a link on Amazon, you're going to do a third printing on this already.
Yeah,
it's only been out for a few weeks.
We'll have a third edition out. Hopefully, we'll be up at Amazon in February.
Can you buy the book now, or is it just on back order?
No, I don't. I'm not even sure they take orders at this stage in the game.
Can you get on the back order list on your website? Because a lot of people are going to want this book at those.
Times wrote about it and didn't even have a copy of the book.
So a lot of people are going to want. How do you get? So okay, here's the question: how do you get a copy of this book if you're sold out and you're reprinting it? How do you get a copy?
You'll be able to get the third edition. Hopefully within about a month.
Do you sign up on your website on Armstrong Economics? Do you have a page to take?
No, we weren't really selling them. This was all done by Amazon. The first edition, the London Financial Times had a picture of it. The first edition is already going for $3,900.
Oh my gosh!
I mean, I couldn't believe it.
How much are you selling it for? How much were you selling it for?
$95.
It's listen. It's a hardback book. It's super well done. I've seen a lot of books. I've seen a lot of best-selling authors. I love the pictures. I mean, I don't mean the pictures are very descriptive, and it's very poignant. And actually, it adds to the presentation. So can I just, so I will just put up the Amazon link. Will you have some information at Armstrong Economics that people,
Yes, we will.
well, I'll put up that link too, to Armstrong Economics, where you'll have some information on how to, because a lot of people are going to be frustrated. They're going to look at this and they're going to go up, sold out. And so they're going to want to work, how can I get on a list? That's what they're going to do.
Yeah, no, apparently a lot of people bought it. They saw it, and then they start buying additional copies to hand out to people.
It's super well done, and it's not a bunch of month. I mean, I can't go into the whole thing and do a book report on a 500-page, nearly 500-page book, but it's super well done, and it's written so somebody like me can understand it. I don't need a PhD in economics to understand it. So I just want I'm going to put up the links to Amazon to see if they'll have some. They'll take back orders or pre-orders or whatever. I'll put up the link to your Armstrong Economics. Martin Armstrong, thank you for telling us, what's going on in the world of this repo market, which is, a last grasp of central banks, and there needs to be a new Bretton Woods, a overall overhaul of money and how it works around the world. Is that right?
We need major political reform. Major.
All right.
We need people in government that actually understand what's going on instead of all this crazy stuff.
Well, Martin Armstrong, the book, of course, is the manipulation of the world economy and how it's and the rise of modern monetary theory at MMT and the inevitable fall of classical economics and a way out, how to fix this global mess that we find ourselves in. Martin Armstrong of Armstrong Economics, thank you very much for joining us today on USAWatchdog.com.
Well, thank you for inviting me.